Good morning, traders and investors. Todd Gordon here with TradingAnalysis.com. It's your Wednesday webinar. How you guys doing? Good morning. Good morning. Happy Veterans Day to start. Thank you to all of those who've served this wonderful country and helped everyone around the world. We appreciate your service very much. Wouldn't be here without you, and I really mean that. So lots happening as always. I feel like every show, every Wednesday, we start that out saying lots happening, but whole bunch going on here. We've got a decent recovery back in the futures here. Looks like NASDAQ up 1%, actually leading it for a change. We've got a big show, a lot of sector rotation, a lot happening on the macro front. So Alex will step in there. We're seeing a move up in yields, which I think is contributing to sector rotation. Obviously technology, discretionary communications are taking a bit of a backseat as we're rotating into some of the reopening sectors, ones that have been underperforming for a long time, not just during COVID, but even before that. A couple of the news things to start. This EU news of Amazon with an antitrust in terms of violating competition laws was interesting. We'll see. Basically, what they're saying is they're taking data gathered from third-party businesses, selling on the Amazon platform to compete against them. That's kind of been my stance throughout when they first announced the Google antitrust. Is look, big cap tech is really not hurting the end user, and I've been of the point that I think it's helping us be and continue to be consumers. I think it's hurting small businesses, and that's another example. So I don't think there's a big appetite right now to really go out and fight and fend for the small businesses, especially with what's happened in terms of the presidential election. The thing that we're going to be watching here now that the election's over, what are they going to do with any kind of coronavirus stimulus kind of relief package? Democrats are still looking for $2 trillion, and the Republicans are at $665 million, right around there. So this is a lame duck session. We still have to see what happens with the Senate. Georgia is among one that's facing a runoff here in January. So see what happens there. Other things that kind of caught my my attention here. Obviously, the news out of Pfizer was interesting. I think there's still a lot of logistical challenges in terms of disseminating that vaccine. Will they be able to get it out in the timeline that they said? I heard there are some logistics, some transportation and storage issues. I was on CNBC yesterday, and my buddy Mark Tepper brought that point up, and I thought that was interesting. Sort of looked into that. Boeing is one I do want to talk about. They're set to face new penalties. There was something to do with 2015 regulations. If they didn't have their ship in order by 2020, they'd face additional penalties, and there's been some other things. The stock's acting well pre-market. Boeing is one of the stocks and the sectors that we are seeing rotation in. Terry Long will take us through that. I thought that Apple meeting yesterday was interesting. They're finally putting their own chipset in the new line of Macs, specifically the laptops, the MacBook Air and the MacBook Pro. I guess that MacBook Air is like, I don't know, 3, 4, 5 times faster than it used to be. Really good performance, I guess, coming from the new line. And those chips were in your Apple phones. They were in your iPads. They're Apple. They're in-house made chips. They're moving away from Intel and AMD. We're seeing that come through in the charts of Intel and AMD. But Apple's, I think, acting well. So that's kind of everything that's going on here. Bennett, if you don't mind, I'll share the screen and just sort of give you a rundown as to what we're seeing here in the pre-market. Get myself in order here. Thanks very much. As I said, futures are up here this morning. They're off their best levels, up 0.97% in the NASDAQ here. Gold still languishing around 1,900. Crude oil's getting a pretty good bid. We're up $7 or $8 here in the last week, up to 42. Bonds have been interesting on the way down. Yields are moving up, and I think that's pretty interesting. The one thing I always like to step back and just kind of give you guys this 20,000-foot view, even to get off the daily, the S&P, get down to the weekly. We tried to break out on the back of the Pfizer news, and as well as sort of a split government in terms of Republicans holding the Senate, Republicans picking up seats in the Dems, but still in the House under Democratic control, and then obviously Biden in the White House. We tried to break through, but it was still rejected from this long-term uptrend resistance. We're still making higher highs, lower lows. It's still very much a range, and we'll see if we can sort of break out of that range here as I'm losing my thicker swim charts. One thing that I do want to show here is the sector overlays here. This is, I consider to be the let's see here. Come on, XLC. Update. XLC was set up here one day. There we go. I can kind of consider it to be sectors like technology, communications, and discretion sort of in one bucket, sort of the more risk on, higher beta kind of sectors, and compare that against materials, industrials, and financials. And let me just throw XLK on here. Then I'm going to bring the team in. This is kind of an interesting look at the rotation that's happened in terms of XLK. Okay. So if you look at these 6 sectors, which I think are very key, look at what the former leaders, XLK, technology, consumer discretionary, and XLC, which is communications, look what they've done. They've made lower highs. XLY did make a high, but it then made a lower high, almost a little bit of a head and shoulders there. XLC has made just a lower high. So we've got tech, discretion, and communications since September sort of diverging off the highs, but then you compare that against materials, industrials, and financials, and you can see exactly what I'm saying. I mean, financials new high, industrials new high, staples new high, relative to the high that technology put in here in September. This is not just something that's occurred over the last couple of weeks. This rotation has been happening for 2 months now. So listen, I've really enjoyed the technology rally. We've made a bunch of money on the way up. I've definitely given some back. I'm still well up in my portfolios in the year, but we really have to think, is this rotation real? And again, this is not just happening over this little bump over the last week or two. This has been happening in September. So that's interesting to start. Let's bring in the team here, TradingAnalysis Team, Terry, Bennett, and Alex. Good morning, guys. How are you?
Good morning, Todd.
Morning, everybody.
Right.
Good morning,
Happy
Todd.
Veterans Day.
Absolutely.
Happy
Happy
Veterans
Veterans Day.
Yeah.
Yeah. What do you guys think? Rambling open thoughts. How's everyone doing?
Doing good. Just keeping our eyes on the futures market here. It certainly has been interesting since the that Monday morning opening run that we had up there, new intraday high, and certainly seeing a little bit of a correction. We've got some interesting chart work in the S&P we'll take a look at, but absolutely in regards to the rotation that you're seeing there, I'm very curious to see what Mr. Terry Long has to say here in just a little bit. So looking forward to the show. Should be a good one.
Yeah, for sure. A lot going on. Yeah, I do know Terry put a new, are you going to talk about the Roku? Sorry, I'm stealing your thunder there, but Terry did put together a nice Roku, one of the strong technology stocks that is moving up. We have that on with members. Everything's proceeding on the money management side very well. I'll drop a logo contest for you if you guys don't mind. I have a contest or sort of a poll. Would you guys help me select the logo for the money management business inside Edge Capital? I'll drop that in at the end of the show. That's progressing nicely. I had several people reach out on the money management side. I have had nice client conversations. And from that, let's go to Bennett, and let's go to the hard red edge of the chart and figure out from an Elliott point of view, where are we, brother? Give us
Sounds
context.
good.
Help us.
All right, I'll be back with you in a minute here. So again, good morning. Thank you guys all for tuning in, and let's jump right into it here. So taking a look at the S&P 500 to the point that Todd had earlier just out of the open here, essentially since January of 2018, believe it or not, the S&P 500 has been in correction, and it might sound a little crazy given the swings that we've seen, but really we're in a period of expanding volatility. So lower lows, higher highs, and that trend line, which you can source from either the January of 2018 high, in fact, you could also source this from the September of 2018 high, where I'm establishing the third wave top. And if we just draw a trend line from that through the February high earlier this year, you'll see that's where we had resistance in August, and that's again where we're running into some resistance here, or we did on Monday, and seeing a bit of a pullback. I'm tracking a wave count here, which could be setting us up perhaps to finally break free from this very prolonged correction, which is really unlike anything we've ever seen in the S&P going back to the late 1800s since its inception. We have had some expanding kind of triangle looking patterns back in 1966 through 1974, but this one is a lot more significant in the magnitude of swings that we've seen. So the way I'm looking at this, we're going to get off the weekly chart here, and we're going to drop down to the daily and kind of focus in on all the price action there. So off the weekly and down to the daily chart, you'll see that off of the March lows, I'm actually counting this particular structure as a post-fourth wave move. And we do have a structure which suggests that we could be moving even higher in a third wave position, but I'm going to approach this a little bit more conservatively and look for what have been kind of our longer historical upside objectives in the S&P. And what we're going to do now is focus in on all of the price action from September 2nd on through today. So this white circle, we're going to get off the daily, and we're going to drop you down to the 1 hour time frame here. And again, we took a look at this last week. Off of the September 2nd through the 24th low, we have a nice three-wave measured move going into the October 12th high. We also have, yet again, a beautiful measured move in that your A wave or your C wave was equal to the magnitude of your A wave. So if you were to just take that in semi-log scale and project from the completion of this little sideways three-wave flat, that's right where we completed that upside three-wave move. From there, we looked last week and we were joking about the fact that equality of wave C compared to A came in nearly spot on to the hour. We're actually on a 30-minute chart here. And what's really rather interesting, I was looking at this with a friend of mine last night, and he goes, okay, so equality happened 1 hour after the market bottomed. It was likely just due to time change, you guys. So I had to throw that joke in there. But really rather fascinating to see the time elapsed between September 2nd and 24th being equal to the decline from the 12th through October 30th. Now from there, we had a monster rally from the October 30th lows into Monday's high. We saw a rally to the tune of 12.74% in the S&P. Really pretty incredible, very short run there. And it kind of unfolds in a bit of a textbook kind of five-wave progression. You've got a nice 1-2, 1-2. Notice I see 3 acceleration gaps here. You've got 1 acceleration gap there. You have another one here and then another one here. Those are occupying the higher degree third wave, which is very common when dealing with a third wave upside move. Your wave 3 was 261.8% of wave 1. And then one of the trend channel techniques that Elliott wave teaches us is this. When you have the completion of your wave 1 and your wave 3 anchored, you can draw a trend line between those 2 points, project a parallel trend line through the bottom of wave 2, and you'll notice the market did try to hold that trend channel. We then kind of went in a longer sideways fourth wave correction, which can actually be decomposed in a variety of ways. And once you have your fourth wave anchored, you can take the kind of the opposite of that. I teach it as the 2-4-3 trend channel. You draw a trend line from 2 through 4, project your parallel trend line over the top of wave 3, and that often gives you, when used in combination with your fib projections, your wave 5 top. And that's pretty much what we've seen here. Since then, we are moving lower in what I see to be a wave 2 correction. Now, wave 2 corrections can be a variety of retracement levels, so the depth, the magnitude of that correction can vary. It could be a shallow 38% retracement and take you to the area of the previous fourth, or alternatively, it could be a more significant 50 or even 61% correction. So what I'm looking to do here, and if you're looking to perhaps trade this in the short term, is once we get some sort of a counter trend move, I do think that this sideways correction could very likely resolve lower down into wave 4 support. I'll be watching that upside move here in this B wave. And then once we have some sort of a directional C wave, which resembles that of this initial decline into key support levels, that's when I'm going to be looking at the possibility that perhaps back here on the daily chart that we are gearing up for what would be wave 3 of that higher degree wave 5, kind of reattack that upside trend resistance line or expanding trend line. And at that point, we would be setting up for some sort of a wave 2 correction prior to resolving higher. Now, we do have an alternate wave count. Both of them have implications to the upside once this wave 2 correction comes to completion. I'll be keeping our eyes on this possibility as well. Another kind of interesting takeaway here is if you take a look at the Dow Jones Industrial, I've got a nice wave count here, which also suggests that this was simply a 4th wave correction, squares up to wave 2 of the same degree, and we have upside projections here up through the previous highs in February. The Dow Jones, we've got New York Stock Exchange. This is one we don't typically chart, but here's another one which suggests perhaps this was just a 4th wave and we're moving higher in wave 5. Now, I've seen some wave counts out there that suggest that this wave 5 is over. I don't see that. I don't see that for the markets just yet. It would be a little bit short. And then I put out a video on the Russell 2000 small caps, and it's acting really well here, really strong. I've got a structure here which suggests we're in 3 of wave 5, so keeping my eyes on that one for continued upside. But I like this S&P consolidation. I don't care for the fact that that we did reject so significantly that kind of expanding resistance line. Also made for kind of a ugly candlestick print for those who follow candlestick analysis on the daily chart. But if I bring in just a traditional 50 and 200 RSI, or 50 and 200 moving average with relative strength here indicator, we're essentially consolidating, you know, around this 50 moving average. So keeping our eyes very closely on price action and curious to see where this takes us overall. Back to you, Todd.
Yeah, well done, Bennett. Yeah, you know, as you said, you're not very concerned with resistance failing. I mean, when they try a level or a trend line, whether it's horizontal or angled, you know, multiple times, they want to break it. You know, I think in this uptrend, still in technology, resistance is made to be broken. I don't think everything that's been working for so long, we've mentioned sector rotation several times, but I don't think, you know, the technology stocks that have been working, I don't think are all of a sudden going to stop working. Maybe the Pelotons and the Zooms, you know, we'll see. But they've pulled back. It looks corrective so far. I don't think we're going to see a full-on rotation. I do think we continue higher. I do think we're in a bull market, and it's not time to panic in here. Plus, we got to keep in mind, we are coming into the holiday end of the year, which trading can be dicey. It's almost Thanksgiving. I can't believe it. So just keep that in mind. All right, guys, I guess we got to take a commercial break. We'll be back on the other side with Terry getting us into, as I just mentioned, sector rotation. Be back in just a bit, guys. Also, while you're there, be sure to hit the thumbs up button. Let YouTube know that you're enjoying this show. All right, thanks. See you in a bit. Hi, if you don't know me, I'm Todd Gordon. I worked in the trading markets as a profession and a passion immediately following college 19 years ago. As I've grown older, my trading and investment style has changed. As I've grown as a trader, my holding period for my investments was also growing longer. I was learning firsthand that being properly allocated in the right stocks and sectors on a longer term time frame with proper hedges in place and the idea of compounded returns are the keys to building real long-term wealth for most of the investing community. You can short-term and swing trade the stock and options market if you like, but do so with a very small percent of your capital. And by no means should you be trading with a majority of your investable assets or your portfolio. For our clients at Trading Analysis, we recommend that you don't trade with any more than 20% of your portfolio in the strategies for our members at TradingAnalysis.com. The rest should be managed by a professional financial planner. So last year I ventured out to make a final evolution of my career in the markets. I left the very capable team at Trading Analysis that I built to run the day-to-day operations. I set out to build a wealth management business leveraging our reputation from CNBC and our years in the financial markets. We'll be launching soon, so please keep an eye out for details. If you'd like to be updated as information becomes available, please visit www.tradinganalysis.com/investments. Again, thanks very much for your interest. Look forward to what the future holds. Cheers, and let's get back to the live stream.
Hello traders, I'm Terry Long at TradingAnalysis.com. This is your weekly sector focus. First, to all veterans out there, thank you for your service on this Veterans Day. And last week, what a reversal of fortunes we had. The prior week's big ugly was totally recovered this past week. But even Monday's market opened with another boom here, setting us up into new all-time high territory on the heels of that Pfizer announcement on that 90% success rate for that vaccine. Way to go. You can see by the fib retracement here how that 786 of this decline here was exceeded, supported, and now we're settling in basically at 100% here on the S&P. Now it's a different picture here in the NASDAQ. Yeah, the NASDAQ gapped high on Monday, but then closed much deeper. So totally tale of two cities here. I think totally different structure going on here. If we compare last week's sector performance here, you can see how all the sectors rebounded dramatically. But let's take a look at what they've been doing on Monday and Tuesday. We've seen a continuation, or basically we didn't have any energy rise last week. We got it all here on this week, Monday and Tuesday. Financials still picking up a little bit. You know, while last week the technology here and healthcare and materials came back sharply, we're seeing technology and communications, healthcare, you know, kind of just taking a bit of a back seat to the action this week. Let's flip over here to our weekly sector rotation. One of the things I can see, the materials sector actually attempting to take over second place here with industrials. I've got 103.6 on both of them, but they're just playing tag right now. I'm seeing industrials decay, but it's still pushing a little bit to the right. Materials maybe tending to hook a little bit more to the right. We'll see. So these guys are playing tag as to who's going to move up into number 2 position, while consumer discretionary is pushing down here into our weakening quadrant, and more than likely it's going to take a back seat. So I expect fully by next week we're going to see either industrials or materials sitting up here in the first place. Technology, communication still continuing to show a bit of decay. Now, another noticeable sector here is utilities, right? Seen here with rapidly rising momentum. Although for now it does remain in this improving quadrant, it is showing signs of increasing relative strength, and it could possibly push itself over here into the leading quadrant. Momentum in healthcare is also growing, and it's now risen out of the lagging quadrant up here into the improving quadrant. Real quickly here on our daily chart of the growth versus value, we saw value start to decay, growth start to recapture last week as technology was regaining itself, but then we see the reversal here again as technology's taken the back seat. Growth stocks have sharply reversed, spinning back around rapidly here as value is jumping forward. So on the daily, there's still a lot of volatility and switching around in this market, and that's what this evidence. But if you look a little bit on the longer term here, on our weekly chart, yes, we're continuing to see a slow decay here of growth, and a little bit of continued improvement here in value. So this is our longer term perspective there. Let's switch over here to the sector of the week. I'm going to talk this week about the materials sector, which has been gaining ground quite nicely. In this sector, I see several stocks such as International Paper, Martin Marietta. I like these guys. I like the looks of what they're doing here. They've been progressing. I told you guys about these things several weeks ago, right? I think this is maybe not necessarily an ideal entry point, but it's certainly a good entry point when we start to see a nice northeasterly push coming across this improving, and we've got a good angle trajectory that we think we're going to continue higher. And lo and behold, there, if I just rotate that through the last month there, you can see that these guys are our new sector leaders here. There are some hooks forming down here in the past leaders in Air Products, Dow, Linde, and Amcor here. And so these guys have been weakening, but they didn't cross over the border into the lagging. So they're on a rotation back up. Let's take a look here real quick at Amcor, because I think what we're seeing when we see that is a period of consolidation now being broken and breaking out to new highs. So you can see Amcor basically all of this period from August 19th until here, early November, and now we're breaking out, right? So that's a key signal when I see these hooks form that we're potentially rolling right back up into another impulsive move higher. All right, the materials sector is divided into about 9 different industry subgroups. And I want to take you through a few of these here. Inside the commodity chemicals, this is commodity chemicals. I like this, like Olin. It's moving rapidly now up here, northeasterly up here into the leading quadrant. If we take a quick snapshot here of what the price chart looks, you can see that the 50-day crossed over the 200 here back around October 28th, and we've been steadily, the price has been steadily being supported even by its 20-day moving average, and continuing to outperform. Now, let's jump over to another group. Let's jump over here to take a look at this one. This one is containers and packaging. So there's several stocks making good progress here. I'll sort these by relative strength ratio. But you can see this group that's starting to outperform the benchmark S&P dramatically. Nice northeasterly vectors here, and these guys have started to roll over, but that's not a sell signal. This rollover just simply means momentum is slowing down or taking the same pace as the S&P. No more additional rate of change, but the relative strength is still continuing to grow in these guys. So I like these. I like Ball Corp, and WRK is WestRock. It's not Slack. That's WORK. So WestRock and Packaging Corp's. Not really sure what would be the underlying excuse me, frog in my throat. I'm not sure what would be the underlying driver behind the packaging industry all of a sudden taking flight, but that's kind of interesting here. All right, gold mining stocks. The gold miner group continues to decay as downward pressure on the gold and silver continues. I saw gold spot this morning at 1870. Silver is falling 3 times as fast as gold. So these guys, there's almost nobody left up here in this leading quadrant where they once were. There once was a huge amount of leadership, and all that started leaving. And these guys are now underperforming. All of these guys are underperforming the overall benchmark. Now, a couple of more sectors, or a couple of more subgroups here. This one is non-ferrous metals. And I mean, there's, look here, Turquoise Hill Resources, right? I hadn't been looking at this for a while. I just created these new industry group list recently, and as I started looking there, I'm like, wow, look at the run on that. Look at the length of the tail. This tail is 4 bars long, right? All these tails are identical in time, and you can see this trajectory, this impulsive move here in this stock. So there's a few that are continuing to do well there. And let's take a look at this one here. This one is specialty chemicals. Now this group's got a lot of players in it, and there's a lot of laggards. So randomly choosing something out of this group would be a 50-50 chance at best that you do anything. You really need a tool that's going to help you filter and screen, find your best performers, find those ones that are coming up out of this improving quadrant, moving into a position where they're going to continue to hold relative strength over the next several weeks and or months in whatever your investing horizon is. So that's very good. You guys can dig deeper into this industry group for rising stars moving up out of this improving quadrant with the northeasterly headings. That like I said, is just indicative of continuation of the outperformance relative to the benchmark. I could go on here, but I'd probably run over my time allotment, so I'm going to give it back to you now, Todd.
Great, well done, Terry. Really interesting stuff, and I'm gonna pick up. Alex is gonna come in next and talk about macro and crypto, but I'm gonna pick up where Terry left off. Some really good work there on the materials. There's some pretty interesting rotation, and trust me, we are trying to stay with the technology trend. This favoring of growth over value, probably more so than a lot of other shops out there, but the rotation is real. So we really need to think about it. I'll talk about that in portfolio rebalancing next section, but now let's head over to Alex. A lot going on in the macro section here, macro world with interest rates and crypto. Alex, good morning. How are you?
Hey, good morning, Todd. Yeah, well, lots of events. Definitely 2020 has been an exciting one, and it's still not finished. So yeah, yields are going up. Let me start with dollar index. We are still holding our overall view here. As you can see in chart, this is a daily chart of dollar index. So we are consistently having this support as a secure harbor for dollar, and we are anticipating one more move on the upside in this either a flat or WXY corrective pullback, and then I think that the dollar will start in 2021 a dive lower. Just a quick peek on yields. 10-year yields are moving up. We have been tracking this with our members on our member webinar every week. So I'm still not definite because we are not out of this consolidation, but it seems like yields will start to move higher. We've seen that move in dollar yen, which I will just show you in a minute. From the dollar, let's see a little bit what's going on in the oil space. So oil has, from our support level, went on the upside on the news of the vaccine. So we are still holding this key resistance levels, 78.6 retracement of this move down. We have equality between A versus C, and we have also a previous highs around 43. So I need a clean breakup on the upside. This also can turn out to be a flat. So I will not be still looking for a very strong buy in oil because of Europe is closed. Vaccine distribution, as you said, it's not going to be, at least for the next few months, especially all over the world. So the consumption of oil is dropping. So I will not give this run such an excitement yet. Potentially, I'm going to look for another move down to this support 33 levels, or if we are in a flat, we will go back to this 36, potentially 38 zone if we get a running flat, and then continue higher. So for now, I'm not so excited from the fundamental picture and the technical one on the oil bull run on the upside. So let's skip the stuff on the dollar and oil and look euro dollar, which is following our path for now. Wave one array, 3 waves up, 3 waves down. So I'm going to look for a 5-wave move down to 114, 115. So this one is going as we are kind of looking for the back of a few weeks. So dollar yen is very interesting. So a very, very, drawn out consolidation, 5-wave moves up, W, triangle X, ABC down in Y, kind of a perfect match of these levels here. And we are going up impulsively now with yields up. As we know, dollar yen is following up yields or stocks, while the S&P was growing from March. And dollar was moving down. Dollar yen actually moved in synchronicity with dollar and the yields, but this sudden move up in yields are taking us up in dollar yen. So I'm going to be looking for some longs here after a pullback. I think this is the start of a new A wave on the upside, which should have 5 waves up. So we are looking for to buy potentially a pullback here. Also, what is interesting is Turkish Lira dollar, which was a very interesting chart in the news in the last few weeks. If you look the whole wave on the upside, it's really incredible. Look at this. So there is a wave 1 and 2, very long wave 3, triangle 4, and we exactly peaked at our target, which we do with our members at the classical measurement of the triangle target. So we are looking for 5 waves down and a pullback. I think it's a very, very constructive chart for a Turkish lira to strengthen a bit after this huge move from 2008 on the upside with the dollar and weakening Turkish lira. So I think 5-wave sequence is done. We just need a confirmation, and I think this will be a good setup in 2021. Let's just look briefly for a gold. We anticipated this sideways consolidation in gold. On the vaccine news, we dropped sharply, which is kind of a normal because gold is still regarded as a safe haven play. So when you have this big news, sellers of gold just jump on it. And as you can see, I'm still going to hold the view that this is just a 4th wave until we keep this wave count invalidation. Silver is still falling sharply, so our silver wave count is still pretty much in line. So I'm going to show you this one, which we were looking for WXY actually, and this one is still going on. Sorry, I have so many charts and always rebalancing my wave counts, try to adjust them. But in general, 3 waves down, 3 waves up. So I'm going to look for a potential one more move down in this either B wave or a 2nd wave. And from there, I'm going to be looking for, from these support levels, move in silver up. Jump to the cryptos. So our wave count on the Bitcoin is getting a little bit extended here. As you can see, RSI is hitting pretty big levels here. I must tell you, I like more this wave count than addressing. I have an extreme bullish wave count, which actually addresses here a pullback in a wave 2, but this is not even a 23% pullback for the wave 2. From the Elliott wave perspective, if we count this as a 1, 2, 3, 4, and 5, look at the wave 2 here. It has some time and longitude. Also, this wave 2 was really huge. So such a short, less than 23%, I mean, I have it as a wave count extremely bullish. So I think on this bullish wave count, we will have still another small pullback, because if we respect a wave degree a rule, this wave 2 should be really short, and we should be going above these previous highs in 2017. But I'm really looking for this wave count, where we have a 5 waves up done, a little bit more of a pullback back to this 38%, and this line here, which you draw 2 weeks ago, which we connected this resistance and support level. So this pullback will be more natural to my mind. So I'm prepared for any events on the Bitcoin. We stay constructive, we stay bullish for now. But I will be looking for a little bit larger pullback than the crypto community is looking for, which are extremely bullish on cryptos in 2021. So that's a quick update. Back to you, Todd.
Great update there, Alex. Yeah, a lot of good moves in the, especially around the election. There was good moves in dollar MEX and dollar RMB or dollar yuan. Which has a lot of similarities to 2016. So FX is moving again for now, and watch that Bitcoin. I know Alex is looking for resistance on the top side, but it's starting to be embraced. So, all right, let's just let's head into sort of a portfolio update here. I think, as I said, the theme here is rotation. Let me just check my time schedule. I want to be respectful of everyone's time. You know what, Bennett? Let's skip the second commercial break. We don't need sponsors' money, right? Let's just forget that. So I think there's a couple stocks that I think are moving fairly well in here. There's some travel related. Let me just get my I need a producer next to me here. A couple travel related stocks that are acting quite well in terms of the sort of the reopening. Booking is one of them. If you sort of look at the move higher we saw in BKNG up to 2000, you can certainly come and see we're about to break through the downtrend resistance here after a monster uptrend. Booking is one that I would say that sort of indicates that the reopening is upon us. EXPE, Expedia as well, sort of a similar pattern. I think there's a demand for travel, sort of a downtrend resistance into the 130 here, and then some of the airlines here. You take a look at Southwest. Southwest, I think, is sort of the best looking chart in the airlines. I do like the break up through 43 3/4 here in Southwest. The other ones I'm not super excited about yet. UAL does not look good. JBLU is not, I don't know, it's certainly showing some pretty good strength, but it's not up and through resistance with any sort of conviction. And if you look at longer term here, it's okay. Not quite what I think Southwest is. So if you look at that, I like the pullback here in Southwest. Boeing, despite the bad news they got about the second potential mix up with the regulatory bodies, I do like the move up here. We're up to 190, trying to break through this 200-day moving average through 190. It's starting to look better here for Boeing. It's starting to be some impressive price action there. As Alex mentioned, the move up in yields, I think, is important. It's starting to filter through. So we've got a 10-year yield approaching 1%. We are through resistance here. And we are starting to see some rotation here into financials. The chart is looking better. I think Morgan is the stock I did on CNBC yesterday. Take a look at this, guys. Morgan Stanley, long-term trend line break here coming on Morgan. And I looked through all the financials, and Morgan looks to be the best. This is a semi-log going all the way back to 93. You've got the 2000, 2008, 2018, and here we're at 2020, almost breaking trend here, okay? So Morgan Stanley is looking to break a 20-year trend line here in the face of rising interest rates. And the other thing that we're seeing is investment services, money managers, as we're moving into this business with increased volatility, companies like Schwab, stock's looking great. They're a sponsor of the show I do on CNBC. They've got the TD Ameritrade merger that has gone through, the acquisition that's gone through, money management, investment services, this RAA business model that I'm going into. I think, I've had a lot of conversations with people over the last couple of weeks, and two main themes. One, they're scared of the volatility, and two, in the uncertainty, and two, they've been underinvested in this massive move higher. So, I think part of it is, the industry that I've wanted to go into in terms of money management, you're starting to see that, people have not been invested in the NASDAQ like they should. So you have guys like Schwab, Interactive Brokers, and the other guys who are acting well there. So watch those guys. I think financials are looking interesting. Regional banks. I did exit Lulu for the first time in a couple of years. I don't like the way Lululemon is behaving. From an Elliott wave point of view, that looks to be some sort of B wave flatter correction where we might need another push lower. If you look at it from the relative rotation point of view, this is one of my portfolios. You look at this on the weekly. Roku continued to act strong. Zoom, Peloton, Tesla sort of rotating out from a very strong position. Look at this Lulu. Whoa, terrible. Entering the lagging sector with a terrible heading. Lulu is starting to fall out of favor here. It's overvalued. I don't love the acquisition of the mirror. I think they're trying to take on Peloton with the apparel, the clothes and the bike. I don't know if they're pulling it off right now. So Lulu's taking a back seat. I did cut all of my exposure in Lulu, and there's one more thing that I wanted to talk about, which was Ulta. I know the bell just opened. Ulta is coming back online. They had a good deal with Target. Ulta Beauty. They're going to be featured in 1,000 Target stores around the country. They're going to have prominent placement as well as on their website. So they're hitting the reopening trade, but they're also hitting the e-commerce digital exposure. And again, if you look at that chart in Ulta, there's a lot of these kind of three-wave pullbacks, a lot of strength looking to push higher. So I am looking to add exposure, reduce my exposure in tech. I have drawn down a good amount. I'm still well up on the year, but I definitely think we need to look at some names and sort of diversify out of technology. So that's that. Just make sure we hit everything there. Ulta, Lulu, yep. Yeah, that's good. That's going to be a wrap. Team, what do you think? Right on the bell. Let's check those opening prints here.
Spot on, Todd. I think you got it right there. I'll throw another one out there for you to pair up with Ulta. It's Estee Lauder. So do a little
good one.
shopping there. There's always more than one stock in these sectors that we like, and several of them get on the bandwagon. So I guess everybody's bought enough yoga pants, don't need to look in the mirror anymore. That's what you're saying about Lulu? So
the sweatpant trade is over. Yeah, it looks like Lyft is being received well. Looks like they lost $1.46, estimates for $1.33, but it's up. So something has been received well. I haven't gotten into that earnings report. Looks like
they passed that proposition in California that allows Uber and Lyft to not recognize their drivers as employees. So
yeah, that was a big one.
And other things.
Sounds about right to me. Yeah, and then Uber made some changes too. I think you can request your driver, and you can now book stuff 30 days in advance. So that's interesting.
I like carpooling.
Yeah. So it looks like on the opening, XLK is actually leading it. Technology, Qs, communications, staples are up there, but the big one is XLK on the open. Just kind of looking at this XLK. Let me just do a quick scan. So Qualcomm, we love Qualcomm. Qualcomm's leading in technology. Yeah, Qorvo, Skyworks, love Skyworks on a 5G play. So you get a little bit of rotation back.
Guys are taking the back seat.
Qualcomm's the one that we've been following on a fundamental and technical view. Anything that's good for Apple is now going to be good for Qualcomm, specifically the modems in those phones. I broke my 11 Pro, and I was mad for about 30 seconds, so I'm going to go hopefully get the new 11 or the new 12. Guys, what do you think? Are you guys going to get the 12 Pro, the big phone? I don't know if I'm good. I might stick with the small, and let me know what you guys are going to get. Terry, sorry to cut you off. What were you going to say?
All right, I'm an Android. I'm an Android guy. I already got the big phone. I already got the 5G last year, so.
Oh, wow. All right, closing thoughts, guys?
Nope, looks good. Good show. Keeping our eyes on the opening bell here. Had a little bit of that sideways consolidation we looked at in the S&P 500 chart. So if we do start to fade lower, look for those support levels to give you that B-wave counter trend move that we were looking for.
Yeah, for sure. And the other thing is I will drop a link. If you guys don't mind voting on sort of help me, I'm kind of crowdsourcing the logo for Inside Edge Capital. So I'll drop that in here as soon as we shut the show down, guys. But please, throw a thumbs up on that YouTube window. Let the big Google evil algorithm know that you enjoyed the show and help us kind of get the word out there if you don't mind. And have a great rest of the week, guys. Happy Veterans Day. And we'll see you at TradingAnalysis.com. If not, you have to wait till next week for the next show. We'll see you guys. Take care.